Hello, everybody. It's your old host, Brian Hunt, and welcome to another episode of Risk On, Risk Off. I'm very excited to have you on the show, to have everybody on the show today, because I've got a very special guest. Now, for some of you might know, I started doing my video series online, specifically called 60 Seconds of Risk. And yeah, it might go a little over 60 seconds, but not too much, maybe 4 minutes. And I've had the chance to have a couple of great guests come out and bring their knowledge and help share with my clients various aspects of risk. Obviously we talk about many things, not just construction, but we talk about financial risk and geopolitical risk. But one of my episodes that I've done so far is I had this gentleman, Ray Alletto, who I've known for quite some time, and he's been doing risk and insurance for many years. I'll let him tell you about experience. But his episode is still one of the most widely viewed episodes I've had. And actually on that one, I went way beyond 60 seconds. I think we went like 17 minutes. And just a wealth of knowledge, information that, once I started doing this live, sort of like LinkedIn Live, where I have a longer format, I was like, man, I got to get Ray on. He's like a wealth of information and knowledge. And I think everybody's going to really enjoy this conversation. We're going to talk about his background, where he grew up, how he got into it, and course of his career, what he's seen in changes in the insurance world and risk management approach. And I think we're going to talk about how it's no longer just buy insurance, but we really need to talk about enterprise risk management, because I think a lot of you people watching this show, there are a lot of things that are going wrong that go beyond insurance policies, and your companies are vulnerable, and maybe not be able to transfer that by an actual financial mechanism like insurance, but maybe come up with some alternative ways to do that mitigation. But so without any further ado, it's my distinct pleasure to add to the show Mr. Ray Alletto. Ray, how are you, sir?
Brian, how are you? Good to see you.
Doing great. It's good to see you again. So, Ray, before I would typically start, I kind of like to ask the joke, I have like my guests, making the old game, like, where in the world is Carmen Sandiego? So I'm assuming, are you here in Dallas this week?
Yep, I'm in town.
Very good. So, Ray, obviously, very excited to have you on the show. I think we got a lot to cover, but before we get into like the current state of the world of insurance and what's going on in the marketplace, let's just talk about your background. Let's talk about where you grew up. Now, from Connecticut, correct?
Sure. Yeah, I was born and raised in southeastern Connecticut, New London County.
Yep.
I went to my undergrad at the University of Connecticut, and took a year off. I did some work, interesting stuff, and not worth talking about here. But no, to be honest, I was for a very short time. I was a police officer, which was kind of cool.
Really.
And yeah, so but then I did what I always wanted to do. I went to law school at the University of Bridgeport School of Law, which today is Quinnipiac University.
No, I know it well.
I acquired many years ago. And I was there from 78 to 82. I worked my way through going to school at night, and I was doing product liability litigation coordination for a division of Textron, and that actually became my first job in 1982, where I was in-house, and I was just working for the risk management department and the engineering department of the division I was at. Mm-hmm. Coordinating all their needs for product liability defense litigation. So that was my foray into it, and got exposed to a lot of insurance people and claims people, some of whom were the best I've ever met.
Yeah.
And you can imagine Textron's a really big company, and they really did have the best of the best in all respects. But anyway, I was there for about 5 years, and the company ultimately got spun off. And it's an interesting story because they came to me and asked me if we needed to put together an insurance program for the new company that was going to be spun off. And did I think I could handle that? Well, why ever say no, right? So I said, sure, yeah, I can handle insurance.
Whatever, yeah.
Who knows, right? Well, lo and behold, this is a great story. There's a gentleman by the name of Rory O'Brien. Maybe someday he'll see this video. He actually started his own brokerage firm up in Westchester County, New York. But Rory actually made a cold call on me that same day.
Yeah.
And I said, I just got told that I was going to have to put together an insurance program. And he was with Fred S. James at the time. Go back several mergers. I don't even remember. I mean, Fred S. James became Sedgwick, which became Marsh, and et cetera. So anyway, Rory O'Brien told me what I was doing was risk management. And honestly, it's the first time I had ever heard the term. So I knew I worked for a risk management department at Textron, but what I was actually, doing there was more than just handling claims. So
So when you went to University of Connecticut and Stores, which I actually know where Stores is, because many friends from high school went there, you weren't thinking risk management?
No.
Yeah.
I wasn't thinking about insurance or risk management in any way. I was, but one thing led to another, and I want to say right up front, I'm not a lawyer. I've never been admitted to practice. My career has been in risk management now for 41 years. It's actually 41 years this month.
Wow.
So, it's a long time. And I know I heard your introduction. You're way too kind. A lot of what I have to offer just comes from that many years of experience.
Sure.
And having worked, and I'll go real quickly through it, but I worked for, again, Textron for 5 years. Then I went to a company called Hubbell Incorporated, headquartered in Orange, Connecticut. They're a Fortune 500 electrical products manufacturer, very well-run company. I really cut my teeth there. I was a solo risk manager and learned a lot. And, I learned it from a lot of different folks. The brokerage community obviously is very, very helpful. I had some really great leaders on that side and internal to Hubbell. The other thing is Hubbell was a member of a group called the Manufacturers Alliance, and they had a peer exchange group, a group of about 60 Fortune 500 risk managers in the manufacturing sector who got together twice a year to do peer exchange. We actually just we had an obligation every third or fourth meeting to do a paper and present. And I will tell you, I think I learned the most about this business from my peers, from other risk managers. I think I told you the story earlier that when I was young, I was sitting in the back of the room. We had a big round table, and sitting in the back of the room, if we came up with a risk management problem that we had in our company, there were some guys there that had been in the business for many, many years who have already had that problem and solved it. And so, we looked at them as the old white-haired guys in the corner. Yeah. And many years later, I want to say 20 years later, I was sitting next to one of my dear friends, Bob Teets from Cooper Industries. And I said, Bob, look around the room. I said, there's a bunch of kids here now. And he said, you know what? He says, we're those white-haired old guys that we used to talk about. Because look where we're sitting. We're sitting in the corner where they used to be. So I think that it's an important story to tell, is that a lot, and I encourage risk managers all the time to get involved in peer exchange groups, whether it be through RIMS or through some industry, specialized industry group, or form one yourself and get together. And I think that's the best way to learn what's going on and how to solve problems in this business.
No, I think having those touch points and those connections and building out your network can be instrumental as far as problem comes along. Maybe you haven't seen it, but someone in your neck of the woods or your industry has seen it. So it makes all the difference in the world. Yeah.
So after Hubbell, I was at Hubbell. I thought I'd stay there the rest of my life. I was very happy. It's a great company.
Sure.
And I got a call from a colleague who I actually met at that Maypie Risk Management Council, who was the assistant treasurer of GTE Corporation down in Stamford. Okay. And he confided in me that they were moving their headquarters from Stamford down to Irving, Texas. Sure. And as a result, they're losing their director of risk management. Would I be interested in moving to Texas? Well, I went home and talked to my wife, and I really thought the answer would be no. Yeah. And it wasn't. She said, well, this sounds like a great adventure and a great job for you. So let's do it. So we picked up our 3 young kids at the time, who are all adults now, and we moved to Texas. And we've basically been here ever since. We left for a little while with mergers and acquisitions. We ended up getting relocated back to the Northeast. But after tasting life in Texas, my family decided that this was the place they wanted to be. So we came back in a few years later. So basically, we've been here now 25 years with a little brief interruption in the middle.
Well, definitely, I want to circle back on that, your experience, because you got here, and now having lived and born and raised in Irving, Texas, we moved. My parents, who are originally from Connecticut, they moved from here to Irving to Connecticut outside Hartford in '84. So I was there from the late '80s. So you count here just about roughly at that time, and you've seen the growth of this town. And so I want to circle back when we get time at the end to talk about what you've seen as far as this town and how it's grown so much and why you think it's grown so much. But so obviously, big move coming to GTE. Doing the risk management there. So
and that was, and by the way, Brian, that was a really important part of my career, because I was a solo risk manager at Hubbell. I came to GTE. At the time, back in 1998, it was a $26 billion company.
Wow.
In 2000, we completed the largest merger in U.S. history, combining GTE and Bell Atlantic to form a new company they call Verizon.
Mm-hmm.
And it was just, I had a staff, I had other risk management professionals, some of which were the best in the business. And we had obviously with a big company with a lot of money being spent on insurance, we had a tremendous brokerage team as well.
Okay.
It was just a well-rounded organization, but I was able to, again, advance my career and nurture my skills with regard to running a large company risk management department. Ended up after the merger being sent up to the Boston area, was there for a couple of years, came back to Connecticut, believe it or not, for a couple more years when I ran risk management for Purdue Pharma in Stamford. Okay. Ironically, in the same building GTE started it.
It all circles back.
I worked in the same building for two different companies.
Wow.
And then in 2015, 2005.
Yeah.
I met United Rentals, and I ended up going there as a vice president of risk management, and that was the best part of my career, frankly.
Really?
It kept getting better, right? And so and this is another important thing about this industry and this profession. Every company treats risk management differently. Mm-hmm. So every company has different things that they include. I mean, a solo risk manager at Hubble, I managed claims and I managed loss control and managed insurance. Mm-hmm. GTE was a lot bigger. So it was pretty much, in fact, it was called the insurance department because we had a huge company with lots of people involved. Not all of what you might think is under risk management fell under us. At United Rentals, when I first got there, I had over 100 employees. We had everything from safety and training and internal audit and environmental responsibility. So, there was a lot of different responsibilities and a lot of big staff requirements in those areas. Claims department was large as well. Being in the construction equipment business, you can imagine there's a significant amount of general liability, accidents that have to be managed. But also had a fleet of 13,000 vehicles. It was I think it was at one time the 10th largest private motor fleet in the United States.
Wow.
And when you have 3,000 CDLA drivers on the road 8 hours a day, there's going to be incidents. Yeah. Even though that's not where all the incidents come from. The majority actually come from the sales fleet, right? The truck drivers, the smaller truck drivers.
Yeah.
But that was another great experience, having a more complex risk management organization in what I would call a mid-sized public company. Okay. So my career spanned, private companies and public companies, large and small. And I was able to take retirement at the end of 2017. I had my age and my years of service and a great package. So I took that package out December 31, 2017. And started doing consulting work. I formed Alletto Risk Consulting. Okay. And in doing so, I actually ran into a small construction, a good-sized construction company, $1 billion construction company in Dallas called the Beck Group. Mm-hmm. And one thing led to another. And to make a long story short, I ended up breaking the cardinal rule of consulting and agreed to come to work for them to help them with the risk management function and straighten out some things that needed to be fixed. Mm-hmm. I promised that I would do that for a year, and then I ended up doing it for 4 years. and ended up, and so at the end of last year,
pulled you back in.
I took my second actual retirement. This time I promised I'm not going back.
Okay.
I took a retirement at the end of last year. Yep. So started consulting again.
Right.
And that's what I'm doing today. I'm retired, working from home, consulting, and enjoying it. And I will tell you, it is really busy. There's a lot going on, not only in the construction space, but in general around risk management. And there's a need for risk management expertise. So.
Agreed for that.
Having fun.
But obviously, you've seen a lot. You've been in a lot of different industries in different parts of the country. So maybe you can kind of we talked a little bit like a couple of days ago. Let's rewind the clock a little bit. So, and maybe not how you want to do it incrementally, but I'd love to get your impression, or your thought as far as when you first started your career, and you think about the insurance world, not just the carriers, but the brokers, but also like what was expected of an insurance carrier, or what was expected of like what from a risk management department, what did corporate heads expect to come from the risk manager? What kind of, how much time did they give it? Was it just a transaction? And it's maybe sort of gradual work your way to where you are now, to where we kind of the current state of the market.
Sure. So, one of the things we talked about is that, this industry is so interesting because everyone comes at risk management from a different angle.
Yeah.
Not only the employers, but the individual risk management professionals. So some companies, let's go back to like the 1980s, right?
Sure. Yeah.
At one time, procuring insurance was actually just a part-time function of somebody let's talk about a good-sized public company.
Yeah.
Somebody in the Treasury Department had as one of their many responsibilities working with the brokers to buy the insurance. But risk management actually goes back further. It goes back many decades earlier.
Yeah. Yeah.
It just didn't really take hold until the 1970s, in my opinion. Okay. And it started becoming more prevalent in the 80s. So risk management functions came to pass, and so did risk management professionals. When I was in college, there was no such thing as a risk management. I never heard of it before. Right? Nobody went to school to be in risk management. Right.
Yeah.
That was not the case very shortly thereafter. Many of the universities, the Georgia State, University of Georgia. Mm-hmm. I don't want to be biased, but I mean, there's many others.
Yeah.
They now have risk management degrees, and that's all for the better. But it depends on what companies want. Some companies, believe it or not, especially smaller ones today, they think it's really an insurance procurement function.
Correct.
Go out and get the insurance for us, work with the brokers, and that's what they expect.
Yeah.
The more sophisticated companies, and particularly the larger companies, look at risk management in a more holistic fashion. Sort of the way I look at it now, because having been through both large and small companies, I see the difference. But on the risk manager professional side, I think that that's also quite diverse.
Yeah.
I have a legal background. Some of the best risk managers I know are accountants. And everybody brings something to the table. Everyone has some different area of expertise. Some people come from the insurance, industry. A lot of times you'll see a broker who move into risk management, and they bring a different set of expertise, a different set of talents to the table there. Risk management is nothing more than management. I call it the bridge between finance and law. I always believe risk management's a financial function, first and foremost.
Yep.
But it's got so many different technical aspects to it, different facets. There's the legal side, there's the operations side. Mm-hmm. And again, I don't see risk management as only being the insurance function. So you want to talk about that, or?
No, I mean, I think you said something there I want to circle back on, because first of all, for everybody who's watching, if you'd like to have a question you want to pose to Ray, please look at your bottom right-hand corner in the oval section where it says put a comment. You can go ahead and type in your comment and press enter, and it'll come to me, and then I'll see it. And as long as it's appropriate, I'll bring it up to the screen so Ray can take a swag at it. Exactly. So now you said something I want to go circle back to as far as what you kind of observed a change in the way risk management was maybe thought about or perceived. You mentioned like in the 70s or the 80s. Because like for me, I have my own perception as far as definitely when it comes to like, say, contingent time element and business interruption, when that started getting people's more attention, I'll circle back on that. But when you're talking about the change, your perception in the marketplace or how risk management was functioning, was that, looking back upon that, was there a certain incident that happened that you remember seeing, or was it just sort of a change in how governance was being a little more put upon D&O as far as directors and officers, or maybe a little liability? I'm kind of curious if you thought, was there like a perception or event that sort of started driving that?
Well, I think it happened slowly, Brian. I mean, in different areas. For example, obviously there was a lot more focus on corporate governance throughout the 70s and 80s.
Yeah.
For lots of reasons. Enron, for example, right?
Yeah.
I mean, Sarbanes-Oxley came out of Enron, and that changed the landscape completely.
Yeah.
So I think that, the various things. Look, tort litigation really changed the landscape. It got out of control, and we've had some good tort reform in many of the states and federally. So, things, as the law has evolved, so has the profession. It's been required to change with it. And you know what? The insurance market's also changed, along those same paths. So I just think it's, as time goes on, you mentioned loss control. I mean, property insurance, property is property, right?
Yeah.
And there's always been a need for property loss control. There's always been a need to recognize business interruption. And then there are other things that have happened. For example, a lot of things used to be covered by a general liability policy.
Yeah.
There's some really good evidence out there that early on in coverage litigation, general liability coverage, apparently Travelers had an advertisement that said that our policy covers everything.
Oh God. Okay.
Well, that was they rue the day they ever said.
I bet
that.
they did.
It came back in many cases later on. But the truth is, the general liability policy was a lot broader. But as problems came up, like environmental, right? When environmental became a big issue, environmental became excluded. So all of a sudden, then what did that was the advent of the insurance markets coming out with environmental impairment insurance.
Yeah.
So things like that happened. Cyber is another example, right? All of a sudden,
definitely.
Cyber was covered, and then cyber was excluded, and so there's a new product for it.
So I'd like to, kind of like you mentioned the common, and there's a lot of different ways to come to risk management. Like for me, I came in from a different angle in the sense that, like you and I chatted, I am a CPA, and I started my life in public accounting. And actually, my public accounting stint was with a firm you might remember at the time, was called Campos and Stratus. They did time element calculations on behalf of the carriers when someone sent in a property damage, and you got to go through the financials and figure out what an actual loss sustained. And I was doing that. It was like, say, mid 90s. And then from there, that experience got me to where I was working at FM Global. And FM, big world's largest commercial property carrier, handles, property over the world, but they were really starting to see an issue with respect to how to, is it like we used to joke, and a bunch of engineers selling insurance over at FM. They could get the values right, or maybe the engineering right on a building, but like, especially with globalization, you start having contingent time element where how do you place the business income value on a location that's maybe on the other side of the world, but that one component feeds into the system. If you can't get that component, you're not making sales. And that's, that was like, for me, when I was the need to try to get a better sense of time element and business interruption, thinking about Sarbanes-Oxley, Katrina, Rita, the tsunamis that happened in Japan and Thailand, that, things that happen on the other side of the world, knocks out a plant, has disastrous financial impacts to the rest of your organization. So that's how I came in from a macro level, and then been working over the years to get more of a the granular level. But it's
just got more complex, frankly.
Yeah.
Right. As time goes on and things happen, like we talk about corporate governance, and then Sarbanes-Oxley comes along. So now, if you're going to do good, risk management on that side of the aisle, you have to understand Sarbanes-Oxley. You have to understand, the history, and you got to go out and get educated. You have to. I remember going to seminars and learning about this stuff, and it's all important. I remember getting a really great introduction. I won't mention the company's name, but there was a wholesale broker in the New York area that used to specialize. It does specialize in D&O, and they ran a 3-day seminar on how directors and officers liability really works. Mm-hmm. And those are the kind of things that stick with you. But there's and as time goes on, as you were mentioning, things got more complex, so there's more to learn.
Yeah.
And I think that's one of the great challenges for people in the industry today. I don't know how you can learn it all, right?
Yeah,
so
you can't.
But you do, risk managers have to be a jack of all trades and a master of none. You really can't be a complete D&O expert, for example, when you're also responsible for, property and loss control and claims and workers' compensation and all these other things. There's not enough hours in the day.
Yeah.
So, you surround yourself with good people, and rely heavily on the brokerage community for where they can bring expertise. Now, I have my own opinions about whether that's in risk management, but they bring expertise in their particular lines of insurance coverage, right?
Yeah.
And in the construction industry, Brian, you see this all the time. So there's people out there that are builders risk experts, for example. There's folks out there that know about wrap-ups and controlled insurance programs. And they know more than I'm ever going to know. And I ran them, right?
Yeah.
Then there's captives, right? The whole world of captives. I could go on for another hour about captives, having run several of the companies I worked for. And the company I worked for the longest kept wanting a captive, and I kept telling them why it didn't make any sense for them. And so that required, understanding of exactly how it works and where the value proposition was. But there's, like I said, there's a lot to learn. Risk managers need to be a jack of all trades because you don't have time to be a master of any.
No, correct. So, Ray, you probably point out, this is one of the subjects we talked about the other day, and we can explore this. And I want to talk about two components of the insurance world, the brokerage and the carriers. How would you describe or say, how is the brokerage community, or whether it be the professional, the profession itself, or just even that sector of the economy, how would you describe it's evolved over the years, in the sense that, do you think it's improved? Do you think it's gotten stagnant? I mean, I'm curious to, since you're kind of independent, I'm curious to think, if feedback's a gift, what is the feedback you would provide to the brokerage world?
I'll try not to be sarcastic or anything.
It's okay.
I remember early in my career, being in Connecticut, we went into New York City a lot to meet with underwriters and brokers. And I'm not exaggerating. I remember sitting with my broker at a really nice restaurant downtown with an underwriter and having him scratch out the 3 or 4 major terms of a deal on a napkin. I know that's a joke. People talk about they used to bind things on a napkin. Well, it wasn't a binder. Yeah. But honestly, you did that over a 3-hour lunch, in downtown Manhattan. And that's the way things worked. It's still, by the way, a relationship business, in my opinion, particularly for the larger players. And that's another thing that I've learned in consulting too, that small companies that don't have professional risk management, and where I come in as a consultant, they don't have the relationships with underwriters because they're a $100 million, $200 million company. They just don't have that they don't need it. But this is still a relationship business, and it's important to know who the parties are. One of the things I tell younger risk managers is, don't let your brokers tell you that they'll take care of the market side of things. You're on the customer facing side. There's people on the market facing side. I insist on meeting the underwriters. I learned a great lesson from a risk management professional who was at GE General Electric, by the name of Andrea Pearson. And this was just something that I took with me and practiced. She said, rather than going out and meeting all your underwriters, you're doing the marketing, right? Rather than going out and meeting with 6 markets and taking 6 days of your life and having to do a dog and pony show in front of each one, and a repetitive show that you're going to do each time. She borrowed this from the investor relations community. Bring all the underwriters together in one room at your place, under your control, and do a presentation for all of them together. Basically, you're bringing competitors together, but that's the way it's going to work. Yeah. And it's a lot more effective. I did that at United Rentals. I brought in the CFO, and he presented the financials, where I didn't have to do that because he wasn't going to go to 6 or 7 different market meetings. Yeah. But he could come to one and talk to 20 markets in the room. I thought that was a whole different approach, borrowed from the investor relations world that Andrea taught us, and it really is effective. But you have to meet the underwriters. You can't just assume the brokers are going to handle all of that.
No, I mean, no, I think I completely agree with that component, because as a broker, I'm flabbergasted how many times I talk to people like potential clients or eventual clients, ask them a question, have they met their underwriter, and most of the time they've never met their underwriter. And I think that's a missing part of this, because I can write up a summary and do everything I can to present a submission to the carrier, but the ownership or the senior executive are the best people to tell the story what's going on.
No one can sell your risk, your company's risk as well as you can. You can't expect the broker to represent it the same way you would. It's your company. It's the one you work for. It's the one you're a part of, that you work at every day, and you understand the strengths and the weaknesses and the things that you want to explain well. Brian, I do that now for my small clients, right? I learn their business so that I can go represent it in the marketplace. Now, yeah, of course I have to go through brokers, but I want to be able to meet the underwriter. I want to be able to tell our story. And that's what risk managers, that's one of the great things that they have to do.
Amen. Now, what about the carriers? What have you seen as far as the evolution in the carrier place?
By the way, and you asked me, I didn't really answer your last question.
Okay.
So how things are changing? Yeah, it's because I think you and I talked about this earlier. The market is changing, and it's not just in brokers and carriers; it's actually in risk managers too. Mm-hmm. We were in a generation, right, who came up in the 80s and 90s, and I've heard this from a lot of different sources, so I'm fairly sure it's true. That there was a whole bunch of us in this age category who are now, baby boomers, who are all retiring, right? Mm-hmm. And then there's a gap of people that didn't enter into our profession, right? And then there's a really smart, energetic group of guys or people, guys and girls in their 30s and even 20s, mm-hmm. who are coming along, right? So, but there is a gap in the middle, and I think that there's a bit of a training and education gap as well.
Yeah.
Not saying that we know better or we know more, but like everybody, it was passed down to us. We pass it down to the next generation. Yeah. But there's a shortage of people, and we're seeing, and I'm seeing that. And I talked to several brokers as I complain, frankly, about service because that's what I do. And they say the same thing. They said, look, it's brutal getting an accurate binder. It's brutal getting an invoice. And these are the same problems we had in the 80s and 90s. But at least you could find people, right? Today, you can't find people. And I think that the folks that are out there are doing their best. They're overworked, but we need more, and we need more training and more education.
Well, let's circle back on that for a second, because you talked about, and we talked about this earlier. So you've seen the evolution of the industry for, for years. And obviously technology has been adapted, and before you had to send everything by overnight or whatever, now you had email came along, and then you got Excel files, and so there's a way to submit information faster, maybe hopefully more accurate. But to your point, though, it does seem to me, again, I've been doing risk and insurance most of my life, but doing brokerage world maybe the past 7 years. For me, I've just been it's surprising the inefficiencies in respects to how information is sent back and forth. And like, to give you an example, like every carrier seems to have their own different way of receiving information versus like if someone came up with like it throughout an industry standard, we all agree we're going to use this system or this platform. It seemed like that unto itself would be a great way to submit information.
And there's not a single party out there, whether it's the carrier, the broker, or the client, who doesn't want to see that improvement. But it's amazing how it often doesn't happen.
Yeah.
Let me give you a good positive example where it does happen.
Okay.
Chubb, a few years ago, decided that after listening to his clients, and the clients complained that this whole, with automobile liability insurance and having to go through uninsured motorist UIM forms every year and having to sign 50 different forms in 6 different places, they said there's got to be a better way to do this. So they went and developed an online system, and they had a whole bunch of legal issues they had to jump through to get to this point, but they actually were able to launch an online system where you could put in what you're, like, for example, the company I worked for wanted to reject where allowed by law and take minimums where they had to have coverage, right? Mm-hmm. I could enter those parameters, sign an online form in 2 or 3 places to acknowledge what our selections were, and then push enter, and all of a sudden you got all your UIM forms done automatically. And the carrier liked it because now they have it consistently, right? Whereas one broker may have submitted them, later than others, for example, right? Yeah. Or they maybe didn't get signed until 3 months after renewal. None of that was happening. Now the whole process improved, but it's because the carrier listened to the clients and decided to invest. And I'm sure it costs some money to do this, but they invested in the systems. That's only one example. I know there's others. Yeah. So everyone is trying. Everyone wants to make it better, make it easier. There are sometimes legal impediments to those things. Mm-hmm. So things that you might think might be easy aren't really all that simple when carriers need to protect themselves and brokers need to protect themselves too.
Sure. Well, I think I want to get into that whole protect themselves, because I do think, especially when insurance is done at the state level, I do think there are a lot of the inherent institutional bias, people want to protect themselves. They don't want to see change in this into the industry, which I think would be beneficial to the marketplace. But there's like anything else, people like say the combustion engine came along, the buggy people were getting upset about because we got so many jobs, but it moved forward. Electric vehicle, the charging station is going to change how we do as far as gas is concerned. There'll be people who inherently, oil and gas systems inherently got a bias towards that, but eventually things change. And I do think
it's also, maybe you're a little, many people are just a little more impatient and thinking that with the current technology, we could be so much further ahead. But think about it. It wasn't that many years ago. I spent my time putting together marketing booklets, all right, bound booklets and I had a 3-hole punch on my desk.
Yeah.
And we were going through and punching in papers and putting little tabs and making 6, we'd say it's 6 copies of these books that you put together, which include everything from your annual report and your 10K and your loss, all your loss data, and all your general information. And this is what you went to market with, and you delivered to your broker. Yep. How many markets were you approaching? 6. Well, here's 6 books, 6. Or 2 inches thick. How much time we spent? Obviously I didn't do the typing, but we didn't always have printers either. So some of this stuff was typed, and you had to put together those books, and then they had to be mailed basically, right, to underwriters. None of that happens anymore. It happens instantaneously now. Yeah. So there's been a lot of improvement. Obviously, there's a lot more. When we talked about this earlier, we were talking about the fact that we don't. I will tell you my opinion. I don't ever want to see this turn into an automated process. I don't believe insurance is fungible. I don't think I think there's just a need for hands-on review, evaluation, and a true underwriting. Mm-hmm. And if all we're going to do is punch a bunch of data into a computer and get a price, that becomes fungible. I don't think that's going to work.
Yeah.
It's not going to serve the marketplace very well because you're not going to get what you need.
Yeah. So kind of circle back for a second. So we talk brokers now. How would you describe the evolution in the insurance world as far as the carriers themselves?
It's ever changing. The markets are driven by economics and financial performance, like they should be, as they work to provide the best return for their shareholders. They've got a job to do too. I don't think that the market, for example, we'll talk about the property market. Everyone's talking about the property market now, right? Mm-hmm. How horrible it is. It's the market's hard, prices are high, capacity is down. Mm-hmm. And that's not just in the construction space, right? We see that in builder's risk, but we see it in the general property market as well.
Yeah,
market's tough. I love to tell a story. Like, you weren't around in 1986 when we had a real hard market. This is nothing.
Yeah,
but no, but the market, market's hard. And why is that? Well, reinsurance costs are up. Cat reinsurance is driving it, and it all slides down, right? It comes down from the reinsurers to the primary insurers, and down to the clients, and that controls the marketplace. It's cyclical.
Yeah.
It'll come back. It'll be soft again someday.
But I do think, though, we've kind of talked this, the evolution of the years. This is why our perspective is like everything that's evolved over the past 4 years, and especially now, past 10. We've had pandemic, wars in Europe, supply chain breakouts, have evident technology, cyber. I think firms, in order to be successful, when it comes to risk, really have to be thinking more of it, like we talked earlier, at a holistic level as far as enterprise risk management, because it's a question, like say with the property markets. First of all, like let's say you can get the funding to, you got a project and you like it. First of all, you got to get, unless you're paying for yourself, you got to get a loan, and loan the bank's going to require, you say, the builder's risk to be on place. But based upon what the designs might be of, let's say, I can give you an example. New York Times had a pretty good article on this early in the year. Developers were pulling plans for projects in South Beach, or because they couldn't get the insurance, or it's too expensive. But not only say the issue is not where it's like you're going to build it here, but in 20 years with rising sea tides and stronger hurricanes, water penetration going in, you might be in a 500-year flood now, but in the future might be in a 100. And so their question is, as an underwriter, I don't want that. Why would I insure that? It's only going to be a loss leader.
Yeah. And you can't, look, hopefully underwriting is being driven by data, right? Yeah. It's being driven by claims data and exposure data, right? Yeah. So that would be a good thing. You don't want those things left up to opinion or coin toss. So those are good things. Let's understand something. That developer you're talking about for South Beach doesn't have to buy insurance. Now, you just mentioned the lender is requiring insurance. Okay. Yeah. Well, so if you want the lender, you're going to have to find insurance. And that means you're going to have to pay the price. Yeah. But if you can't get it at any price, the lender has to understand that maybe they're not going to make the loan, right? Or maybe you have to get some other funding.
Yeah.
But you can't have the tail wagging the dog here. The insurance is not going to control whether or not you build that condominium, right? You may build it and take the risk, or you may find another way to transfer the risk. And this is a nice segue into risk management, right? Yeah. Versus insurance. Insurance is not the only answer. It's a big part of what we do. That's not risk management.
Yeah.
Think about, first of all, a great risk management program would tell that developer whether or not he should even be considering doing this. Maybe it's not a good idea. Maybe it's not a good business decision. Mm-hmm. And how do you come to that? You come to that through risk management. And again, risk management is not, it's in our titles, and but everyone is a risk manager. Your CFO is a risk manager. Everybody in the company hopefully is managing risk. Your job is to steer it, to guide it, provide some expertise, provide some formal or informal structure or framework around it. So then you get into enterprise risk management or strategic risk management, whatever you want to call it, holistic risk management, where you're looking at what are the exposures to loss and how can we address them? You can address them through loss prevention. You can address them through exposure avoidance. Just don't do the activity. Don't build that condo, right?
Yeah.
But you could do pre-loss loss control. You got to be prepared for mitigation should a loss occur, post-loss. So there's various things that you can do to control the risk. And then you look at financing. Okay, so now you've done all the loss control stuff. Now you want to finance it. How can you do that? Well, you can just take the risk yourself and either accrue for it, or you can just expense it as a loss occurs. If in accruing for it, you get into accounting rules and using actuarial calculations to figure out how much you need to be setting aside. Or you can buy insurance, or you can form a captive and you can, self-insure it. And remember, captive is self-insurance. It's not insurance. It's right. Self-insurance. Yeah. But you can formalize your risk retention with a legal entity like a captive.
So, Ray, you touch on something here. I'd like to get your opinion on it because, one of the things I think we're seeing, especially in this hard market, it's maybe the hard market is driving it, or the technology is catching up with it, in the sense that more firms trying to use technology to try to help benefit, whether to reduce risk, and whether it be telemetrics in a fleet, whether it has a camera pointing forward and the camera looking back into the cab just to make sure that they're got a seatbelt on, or whatever the case may be. Where it's whether I have a particular client that's 24/7 monitoring of job sites with cameras, and they have this banks of individuals actually watching job sites live, And then what we're seeing is, like, especially some of the builders risk carriers want to see, either they want it's a preferred, or they get flat out, you got to have the 24/7 monitoring just to try to reduce theft and risk, especially when prices are going up. I actually had a gentleman on this show before, Brian Clark with Disperse.
Oh, yeah.
They have a technology where they come out and do the video cameraing, 360 imagery during the course of construction, especially on a vertical project. And then they have a team, and they upload that to their proprietary system. And the system will like identify up to 460 different individual parts and components. And then they have a team of architects, engineers overseas that see this system and they can with this progress, they can overlay it with the job build schedule and help their clients understand this is on time, this is behind time, we've got an issue here, flag it, send in the report to the subcontractor and the superintendent. And so, and there was even the story here, Dallas Morning News recently, how there is a large firm here that's using they got their people in the field like wearing a telemetric sort of biometric device on their arm,
Sure. Yeah,
measuring their heat and their blood pressure, and that was made it to the Dallas Morning News and got picked up nationally because, especially obviously with the heat going on here in Texas, and I'm going to have that firm on here in about 3 weeks. So that being the case, kind of a long-winded way to get to it, but how do you see the adoption of technology as far as helping whether risk managers, carriers, brokers help, as far as mitigation of risk?
Oh, it's critical. I mean, it's going to happen one way or another, whether you use it or not. Someone's going to use it, right? And so I think there's going to be more and more demand by the insurance community to have that information. It's good loss control. You know this in the construction space. Job sites today have all kinds of. In fact, the companies that are competing to get your business. To put their equipment on your job site, right? I remember at Beck, there's 3 or 4 companies that came in and use our stuff. Our stuff will do this, does it better than their stuff. And there's cameras, there's all kinds of, and it's really, they make it easy, right? It used to be that there's a computer at the gate and everyone had to come badge in. Well, that's not the case anymore. They read indicators that you a sticker on your hard hat that tells them where and there's all kinds of good reasons. If you had a mass catastrophe in a job site, you would know instantaneously where every person was, right? And you can account for your personnel, things like that. I know that we solved job site theft issues using that technology. That's another great loss control that it provides. But so there's a lot of good things like that. When it comes to the cameras on the vehicles, I have a personal opinion about that.
Okay.
I don't particularly think it's wise. First of all, it's a little bit too intrusive, right? From an HR perspective, I don't think it's great to have that big brother looking over your shoulder and every time you shift the vehicle or you put it in neutral. And the other thing is that I know for a fact that a lot of video from those cameras have been used in more cases, they inculpate the driver rather than exculpate the driver. So while there's always a chance there's going to be evidence that it wasn't your driver's fault, more likely than not, it can prove that it was your driver's fault. Or you have to produce that tape in discovery. And the guy, the plaintiff's lawyers will look at it and they'll find a way to twist the facts and they'll find a way to ask the right questions on the witness stand so that, they can always plant doubt as to whether it was your fault. I think from an evidentiary standpoint, it's problematic to have those videos. That's just my personal opinion. I know there's people on the other side of that. So
that's an interesting point. So that just in that situation, you're saying the cost outweighs the benefit. As far as costs might be like the actual claims you might.
The other thing you don't want your drivers to think that you're in some adversarial position where you're watching them every second, right? You trust them to be good drivers. You trust them to do a good job, and 99.99% of them do.
Excellent. No, that's a fair statement. That's a fair statement. So appreciate that, sir. You have a depth of experience. It's always good to have.
I've seen companies get bit by those videos.
Okay. Fair enough. Fair enough. Well, Ray, obviously this has been a great conversation and want to be cognizant of your time, but I'd like to say, first question I'd like to ask, Ray. So when you're not working, what are you doing?
Oh gosh. Well, I have 2 grandchildren under the age of 4. Well, they're 4 and 2, and they live locally, so
Nice.
so we see them a lot.
Good.
And
good.
and then I have 3 kids between the ages of 29 and 35, and I still worry about them. Like, I know people might not think that's true, but you still worry.
Yeah, you always will. Yeah.
I have one son who's an underwriter,
Okay.
major insurance company, so he joined the family business. Another son who's a accountant.
Okay.
He's the smart one.
Okay.
He's an accountant. He's a controller for a manufacturing company here in the Dallas area.
Very good.
And my daughter works for Cook Children's Hospital and does good work there. So, yeah, it's it's family. Is the answer. I would say golf, but I haven't played golf in a while, and I'm sort of on a hiatus.
Well, I did a golf outing with my clients, or my prospects, and my colleagues. We did that about almost 3 weeks ago this Friday. It was like the baton death march. We had like a 10 o'clock tee time.
I'll tell you what, I'm starting to wonder when the right time to play golf in Texas, because we go from
after Labor Day.
We go from winter to 100-degree weather.
Yeah. It's pretty much once you get to like the early July to mid-September, is like, man, unless you get like the 8 o'clock tee time, ain't worth it.
Yeah, no, it's rough. But so what? I'm a big history buff. I don't know if you see the paintings behind me, but yeah. I read a lot. I love history, American history, and but all kinds. And so I like to. I'm a nerd. I like to study things.
Yeah.
And because I'm doing consulting, I have to keep up. I keep up on the law. I read a lot of cases, and I keep up with developments. I don't have the contacts that I used to have. A lot of my old contacts. I was a young risk manager, so a lot of my contacts are, I hate to say it, but retired or gone. Yeah. But you try to keep up with the marketplace and what's going on in the industry. And look, I don't consider this work. I never did, and I know we call it retirement. Richard Branson said, when asked if he was going to retire, he said, "Retire? You mean stop work? Why would I ever want to do that?" I love what I do, and that's true. I mean, what? I love what I do. No, I don't want to have to get up. Well, days are over, but you used to get up and put a suit on.
Yeah, take your time. Take your time.
Suit and tie every day, but but I don't want to have to get up and drive to an office and be there. Yeah. So this is great. I get to help my clients solve problems. A lot of them are small companies, don't have risk managers, and so it's not hard for me to look smart because all I do is bring some experience to the table, and improve their risk management program.
So going back to your history, what 3 books would you recommend that you enjoyed a lot recently?
3 books.
Yeah.
Oh man, there's so many good books. I only read nonfiction. So
same here. I'm mainly nonfiction as well.
So nonfiction. I'm going to turn around and look at my bookcase. There's so many good ones. There's a book on Winston Churchill, is one of my favorite characters. Franklin and Winston: An Intimate Portrait by John Meacham. It's probably one of my favorite books.
Good.
If you're into Abraham Lincoln, there's a biography, probably the best ever, by David Herbert Donald, called Lincoln.
Okay.
And that, I think, if you study history, you have to study Lincoln.
Fair enough.
And let's see, David McCullough. Anything by David McCullough.
No, I agree.
1776. Yeah. John Adams. All of those.
John Adams. I love that book. And Truman.
Yeah. So that's pretty much it. I also like to read. I know. I got to mention Nathaniel Philbrick. Being a New Englander.
Well,
he's from Nantucket.
Nantucket. All right.
And he's written several books. One is called it's the story of the whale ship Essex. Which is the true story behind Moby Dick, by the way.
There you go.
But he's written several books. Mayflower is one of his books. Anyway, Nathaniel Philbrick, one of the best authors.
Awesome. Ray, thank you much. We could keep on going for this one, respectful of your time, but this
it was fun. This time went by quickly. I was
it goes by quick. You
told me an hour, and I'm like, what am I going to say for an hour?
No, this has been great. This is like I'd say this is an extension of the prior one we did for 60 Seconds. This is Ray, it's been a wealth of information. Thank you so much for sharing your insights. And
well, thank you, Brian. This has been a lot of fun.
All right. Talk soon.
Be well.
All right. So, everybody, I hope you've enjoyed that episode of Risk On, Risk Off. Like I said, I had Ray on the first time, 60 Seconds of Risk. I really wanted to extend this time to really get further in depth into the depth, as far as insurance world and brokerage world, in where things right now stands for enterprise risk management. Again, guys, I appreciate your time. Hope you enjoyed this. If there's a certain topic or individual you want me to have on this show, please reach out and send me a note or post it on LinkedIn. And you can always find these the videos available on LinkedIn. And in 5 days after we produce this, it'll be available for watching on the YouTube channel. So until next time, guys, bye.